Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal. It's the 25th of October 2023 and here are the questions we will be answering today. Will Google's Pixel move make India a major smartphone producer? Are telcos in trouble again? What is Andrew Holland's take on the markets? And what is a space station? Government's Make in India plan got yet another shot in the arm last week when Google announced to manufacture Pixel smartphones in the country. It comes just days after India-made iPhone 15 started rolling out from a factory here. So is Google's move a big step in making India a major smartphone manufacturer? Ayush Mishra finds out. India is striving to become a global manufacturing hub, and Google's recent decision to start manufacturing Pixel 8 smartphones in India marks a noteworthy move in that direction. The tech major's first Pixel devices will be available from 2024. Alphabet Inc.'s Google has faced persistent challenges in establishing a foothold for its Pixel brand in India. But the company's plans to start the device production in India have the potential to boost the country's hardware ambitions. The Atmanirbhar Bharat and production-linked incentive schemes have already increased local manufacturing and value addition in smartphone manufacturing in India. According to a report by research firm Counterpoint, India is now the second biggest mobile manufacturer in the world. Prabhu Ram of Cyber Media Research explains if Google's Made in India move will establish the country as a manufacturing major in the category.
Manufacturing in India is a big step forward for Google and its Pixel phones. It seriously illustrates the commitment that Google has for the smartphone market. That's number one. Will it give a thrust to Make in India as well as India's manufacturing ambits? Definitely. And the point is, at Cyber Media Research, our insights point to the fact that smartphone manufacturing in India, as well as exports from India, that were already on the rise. This move would further propel that forward.
Under the Make in India initiative, the centre has introduced the phased manufacturing program and increased import duties on completely built units and some key components to push local manufacturing and value addition. Consequently, mobile phone exports from India almost doubled to $5.5 billion, about 45,700 crore rupees, till August this fiscal, according to India Cellular and Electronics Association. It is poised to exceed 1,20,000 crore rupees in FY24. In FY23, India had surpassed $10 billion, about 85,000 crore rupees, in smartphone exports. Notably, 98% of shipments in the overall Indian market in 2022 were domestically manufactured. Local smartphone manufacturing leads to an increased demand for components, which may in turn stimulate the growth of the domestic component manufacturing ecosystem. Although it's a step in the right direction, industry observers believe it won't boost India's component supply chain in the near term. That's because of the low domestic demand for Pixel devices in India and the limited volume of production to begin with.
This will certainly have an impact on the ecosystem, developing the ecosystem in the medium and the longer term, but certainly in the near term, it will not happen. Obviously, when you start assembling in India, you don't cater only to the domestic demand. When you set up units here, it's for decades, so you have to cater to the international demand as well. As Pixel finds success in other markets like USA and Japan, and hopefully India as well, if the price points are right, if the savings are passed on to the consumer, they will certainly have to bring the manufacturing ecosystem here rather than importing the components and assembling here.
Google's India plans may also open up opportunities for the export of mobile and other devices to other markets. India has already captured 12% of global smartphone shipments in 2022. Counterpoint's Prachir Singh explains if it can increase India's mobile phone exports and capture a larger share of the global smartphone market.
For India, Google share in the premium segment, which is above 30,000 rupees. The share for Google Pixel is around 1%. So India is not a big market for Google Pixel. So majority of the shipments will get exported to the destinations like United States and Japan, where Pixel is a big player. So on the export side of it, yes, Google it will boost the Indian smartphone exports as well.
Google moving its manufacturing to India won't impact the country's position on the global smartphone manufacturing map. However, industry insiders view it as a positive move, which can attract other global tech companies to establish manufacturing facilities in India. India is now the world's second largest smartphone market after China. No wonder tech giants like Apple and Google are trying hard to tap it. While phone makers are minting money, most companies in India's telecom sector are staring at losses. And a recent Supreme Court ruling is likely to bring additional tax liabilities of about $1 billion on the telecom sector this fiscal year. So what is the new judgment all about and what are its likely implications? Kasturi Akhil dials experts to find out.
The Supreme Court recently ruled that payment of entry fee and variable annual license fee made by telcos will be considered capital expenditure and not revenue expenditure and taxed accordingly. This judgment has caused a stir in the telecom sector, with experts arguing telcos may face additional tax obligations worth $1 billion in the current fiscal due to the change in accounting standards. The Apex Court held that the annual payment that telcos make towards license fee continues to be capital in nature, regardless of the fact that telcos have been making these payments in installments. Telecom companies have long argued that the fee paid under the new telecom policy of 1999 be treated as revenue rather than capital expenditure. Likewise, the Delhi High Court in 2013 had ruled in their favor, but the order was challenged in the Supreme Court by the Tax Department. Currently, telecom operators claim tax deductions on a year-to-date basis, but now they will be required to spread the cost of the license fee over the entire license holding period, which means their reported earnings may go up initially, experts opine. However, higher earnings would mean higher tax outgo. This is likely to impact those companies that are already suffering huge losses, suggest reports.
This is clearly a negative on the industry, especially when the revenue share, which is a operating cost and has been considered by the company the reduction in the year in which it's paid, as against it being allowed over a 20-year period or a 10-year period, depending upon the license it has. And the implication is not only for the telcos, it is across, right? It's telcos, ISPs, anybody who's holding a telecom license. So it could be an implication there as well, including some of the PSUs. So one will need to see how it pans out. It obviously goes a bit negative on the telecom sector, and going back number of years, recomputing and then determining the liability, it again opens and creates some level of uncertainty which looms back onto the sector.
Accordingly, financial performance of telecom operators other than Bharti Airtel and Reliance Jio may take a hit. Brokerage firm Kotak Institutional Equities estimated Airtel and Jio together may face tax liabilities to the tune of 14,000 crore rupees without penalties. The brokerage firm also pointed out that the income tax department could even raise demand for a shortfall in taxes for the period prior to the judgment, which could potentially have a significant impact on telcos' finances. However, the Supreme Court has not given a clarification on the applicability of this provision on a retrospective basis. This comes in the wake of existential threat that players like Vodafone Idea, BSNL and MTNL have already been posed with as a result of eroding market share and subscriber base.
I think it's fair to say that the Jio is regarded as a far more deep-pocketed company than either Airtel or Vodafone. And even between Airtel and Vodafone, as we know, the situation of Vodafone is a bit precarious. So clearly, in as far as being price competitive usually means having to cut prices, and cutting prices, obviously the flexibility to do so depends on your revenues or anything. And clearly, if one way or the other your outgo is increasing, this also reduces your latitude when it comes to being price competitive. So again, this would not be welcome as far as the competitors of Jio are concerned.
According to a latest report by Telecom Regulatory Authority of India, Vodafone Idea lost around 13 lakh customers in July and BSNL lost around 14 lakh. This stood in sharp contrast to Reliance Jio that added the most wireless subscribers during the month at 39 lakh, while Airtel added 15 lakh subscribers in July. Experts agree the accounting change as a result of the Supreme Court's ruling will certainly affect the short-term financial performance of telecom companies. However, the change is expected to level out in the long run through higher depreciation and amortization charges as the cost of the license is spread over the years.
Financial markets, meanwhile, have been on a roller coaster ride in the past few months as they navigated multiple headwinds in the form of US central bank policy, rising bond yields and soaring crude oil prices. Puneet Wadhwa caught up with Andrew Holland, CEO, Avendus Capital Public Markets Alternate Strategies, on his interpretation of the developments and his investing strategies in this backdrop. Let's listen in.
Hello and welcome to the show. I'm Puneet Wadhwa, and today we have with us Andrew Holland, CEO, Avendus Capital Public Markets Alternate Strategies. Hello, Andrew, and welcome to the show.
Good morning, and thank you for the opportunity, Puneet.
Let me start by asking you, are the fundamentals of the economy and markets supportive of the levels where the Sensex and Nifty are right now?
Yeah, in terms of India, I'm more constructive. I think the valuations have come off a bit from where we were a few months back. And in the second half of the year, when I say the second half of the year, I mean from now onwards into 2024. I think the government capex, the private capex that we're seeing will have that multiplier effect on the economy, and therefore I expect to see more earnings upgrades going forward. So that's a positive news for India in terms of the valuation parameters. But unfortunately, it's the worries outside of India which are there, which could obviously have a more negative impact on the sentiment, not just for India but for emerging markets and a risk-off trade globally.
How long do you think that this risk-off sentiment will continue in the global as well as Indian markets in particular?
See, there's many headwinds out there. I mean, if you talk about the US Treasury bond yields, the 10 years nearer to 5%, the data coming out of the US is surprisingly robust, where, it's still, 1 week you're saying the Fed could hike again, and then the next, they could remain on hold. You have the yen near 150, which has been a big carry trade for global markets. China has its own problems. Of course, the Russia-Ukraine is continuing, and of course now we have this whole Israeli potential problem, which could escalate throughout the Middle East, and I think that's what the market's getting more and more worried about. Yes, diplomacy is there, but the market's baking in that diplomacy will work. So if it doesn't, then I don't think the markets are really ready for that. And that could push oil prices higher, which of course for emerging markets in a place like India is not great news at all. So, I said it's more global factors than local factors, which could, take this, I'll put a more risk-off trade for the markets globally.
So which particular sector or sectors, in your opinion, the investors haven't latched on to yet? Or is it going to be more of a stock-specific story from here on? It's
going to be a combination of themes, to be honest. And the themes that we've liked and we continue to like, obviously defense and renewables is something that's not going to go away from us. I think if any of the more recent events have meant that defense will continue to be a sector which people will look to invest in. I think that the CapEx cycle is slightly different than just the roads and bridges expenditure, but more of the smart cities, the smart offices, the smart factories, those companies which, supply to there. And I think that the two other themes that we like, I mean, banking falls into that. Although I am a little worried about this unsecured lending that's going on. And I'm sure the RBI have flagged it a couple of times, might take some action going forward, which might temper down the kind of loan growth expectations which the market has. But longer term, I like the banking sector. Two new themes that we like is obviously electronic manufacturing sector. We think it's a very beginning of the runway, and really beverages, alcoholic as well as non-alcoholic. In terms of that premiumization, it's a young country. Premiumization is going to continue. So again, at the very beginning of the runway here for the growth of that industry. And finally, obviously, we all want experiences these days. So the leisure sector, whether that's airlines, hotels, I think will continue to do well.
It's still early days for the September quarter earnings season. What are your expectations from the numbers, and what are your estimates for FY24 earnings of India Inc.? Given the rising crude oil prices, have you tempered down your expectations?
I mean, I think we've always had tempered expectations, Puneet. I think the market always starts off at 25-30% growth and gets down to the kind of, nearly to single digits each year. I think this year, given my expectations that earnings will start to improve in the second half of the year, and I'm working on the basis that the oil price doesn't kind of shoot across 100, then I think, anywhere between 15 to 20% earnings growth going forward is a reasonable expectation at this point. Margins for certain sectors will be under pressure. If there's a downturn globally, obviously, metals and oil would be under pressure too, if that was to happen.
So what's a broad call on the market, Andrew? Is it a buy on dip or sell on a rise?
No, I'm more constructive, so I'm looking for those dips actually to be buyers. If it was, let's just say if the Nifty was nearer to 19,000, which I'm not saying it will go there, I'd be looking to be more aggressive in terms of buying the market. I think where we are at the moment, we seem to be in that zone right between 19 to 20, and it's kind of whipsawing us a little bit here and there. But I think that's fine given all the global factors out there. Markets have been resilient, if not complacent, with what's happening around us.
Thank you, Andrew. Thank you so much for your time today.
My pleasure.
He's making plans for an early retirement. Business Standard.
Echoing Andrew Holland's sentiments, India's Finance Ministry too, in its monthly economic review for September, claimed that the outlook for the Indian economy for the current financial year 2023-24 remains bright. And in another development, which kind of reflects the country's growing might, Prime Minister Narendra Modi recently announced a manned mission to the moon by 2040 and a space station by 2035. Space stations have long captured the imagination of people around the world, from science fiction enthusiasts to those interested in the frontiers of human exploration. Abhijit Kumar decodes what is a space station and what purpose it serves. If you are a sci-fi buff or at least love futuristic Hollywood movies, a space station is your first stop before embarking on a space odyssey. It's integral to space films, just as it is to real scientific research and deep space exploration. A space station is a habitable structure that orbits the Earth or another celestial body. You can call it a large aircraft that serves as a home and workplace for astronauts and engineers for a long time on the edge of deep space. The pressured enclosure of a space station is equipped with life support essentials and high-tech systems to conduct scientific research in microgravity. It uses large solar panels for power and relies on geostationary relay satellites for communication with mission controllers on the ground. Launched in 1971, the first space station to orbit the Earth was Soviet Salyut-1. It was followed by NASA's Skylab in 1973, an orbital laboratory where astronauts studied the impact of spaceflight on the human body, among others. Later came the Mir, a Soviet modular space station which was operational until 2001. Currently, there are 2 operational space stations in low Earth orbit, the NASA-led International Space Station and China's Tiangong Space Station. The International Space Station was launched in 1998 and is approaching the end of its lifespan, expected by 2030. The Chinese space station, launched in 2022, is designed for an operational lifetime of more than 15 years. These orbiting laboratories are unique because of their microgravity environment. For the past 25 years, the International Space Station has been studying ways to grow food, tracking how the human body reacts to life in space, finding new ways to combat diseases, and testing technologies for deep space missions. Over the years, the ISS has also observed and helped determine the impact of major floods on Earth, volcanic eruptions, habitat changes in animals, nighttime imagery of cities, and more, all from its vantage position. Space stations are symbols of human achievement, fostering international collaboration in space exploration and advanced investigation in material science, space medicine, environmental science, robotics, and life support tech. India has recently entered this arena, aiming to become a major player in space exploration and research. If successful, it will join the elite group of countries with their own space stations.
I will achieve, I will fly high. I am the SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Well, that's not all. PM Modi has also asked India's scientific community to explore possibilities of a Venus orbiter mission and a Mars lander mission. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.